While everyone else is chasing the next meme coin or waiting for some influencer to tell them what to buy, one company has been quietly doing something that most people in this space completely overlooked. No hype, no promises, no moonshot predictions, just infrastructure. Real, regulated, institutional-grade financial infrastructure being built in the background of an industry that usually thrives on noise. And on March 3rd, 2026, that company made an announcement that tells you exactly where the future of money movement is actually going. Not where Twitter says it's going, not where YouTube thumbnails say it's going, where the banks, the payment processors, and the regulatory bodies are actually moving. That company is Ripple. And what they just announced changes the conversation about what blockchain is actually useful for. Stay with me, because by the end of this video, you're going to understand something about global finance that most retail investors never bother to look at. So let's talk about what Ripple actually announced on March 3rd, 2026, and why it matters more than most people realize. Ripple announced a major expansion of its global payment infrastructure, with a central focus on integrating its stablecoin, RLUSD, into a full end-to-end institutional payment system. What does that mean in plain language? It means Ripple is no longer just a company that helps banks move money faster across borders. They are now building a complete payment stack, meaning they handle the issuance of the stablecoin, the custody of that stablecoin, the exchange between different currencies, and the final settlement, all within one connected platform. Think about what that means operationally. A bank in Switzerland that needs to send a payment to a company in the Philippines no longer needs to navigate 5 different intermediaries, each taking a cut, each adding time, each adding risk. Ripple's platform can handle that entire journey in a single connected flow. And this is not a beta product or a white paper concept. Ripple has already processed over $100 billion in transaction volume across more than 60 global markets. That number is real. That number is already in the books. The announcement on March 3rd is about scaling what already works into something much larger. Now let's talk about RLUSD, because this is the piece of the puzzle that most people in crypto either ignore or misunderstand. RLUSD is Ripple's US dollar-backed stablecoin. Every unit of RLUSD is backed by actual US dollars and dollar-equivalent assets held in reserve. But here's what makes RLUSD different from most stablecoins in the market right now. It was built from day one with regulatory compliance at its core. Ripple holds a BIT license from the New York Department of Financial Services, one of the most demanding financial regulators in the United States. That license means RLUSD is not operating in a gray area. It is operating inside a regulated framework, which is exactly what institutional clients need before they will touch any digital asset with their balance sheets. Now zoom out for a second. Stablecoins globally processed $33 trillion in transaction volume last year. $33 trillion. And stablecoin transactions now represent 30% of all on-chain activity. That is not a niche use case anymore. That is a payment category. What Ripple is doing with RLUSD is positioning it not as a speculative asset, not as something you hold and hope goes up, but as settlement infrastructure, the same way correspondent banking works, except faster, cheaper, and with a verifiable on-chain record of every transaction. RLUSD is the rail. The businesses running on top of that rail are Ripple's institutional clients. Here is where the announcement gets really interesting for anyone who follows traditional finance. Ripple Prime, which is Ripple's institutional services division, has been integrated with a platform called Hidden Road, and Hidden Road is now listed in the DTCC directory. Let's break that down, because DTCC is not a name most crypto people recognize, but it is one of the most important institutions in global finance. The Depository Trust and Clearing Corporation, DTCC, is the backbone of the U.S. financial system. It processes and settles the majority of securities transactions in the United States, handling trillions of dollars every single day. When Hidden Road, now connected to Ripple Prime, gets listed in the DTCC directory, it means that Ripple's infrastructure is being recognized as a legitimate counterparty within the traditional financial settlement system. Together, the entities connected through this partnership handle approximately $16 trillion in annual transaction volume. That is not a startup trying to disrupt finance from the outside. That is a company embedding itself into the existing financial architecture and making blockchain-based settlement part of how that architecture operates. This is the kind of institutional validation that takes years to build and that most crypto projects will never achieve, because most crypto projects were never designed with this goal in mind. Let's talk about regulatory positioning, because this is Ripple's single biggest competitive advantage, and almost nobody in the retail crypto space talks about it. Ripple holds over 75 regulatory licenses across multiple jurisdictions. Not registrations, licenses. There is a significant difference. A registration means you told a regulator you exist. A license means a regulator examined your operations, your compliance framework, your financial controls, and your risk management systems, and decided you are authorized to operate. Ripple has done that work across more than 75 regulatory environments around the world. That is an extraordinary level of regulatory penetration for any financial technology company, let alone a blockchain-based one. Why does this matter so much? Because the institutions Ripple is targeting, the banks, the payment processors, the treasury departments of multinational corporations, cannot and will not work with providers who are not properly licensed in the jurisdictions where those institutions operate. Regulatory compliance is not a checkbox for these clients. It is the precondition for any conversation. Ripple understood this years ago when most of the crypto industry was treating regulation as the enemy. That strategic decision is now one of Ripple's most defensible competitive advantages, because building a global regulatory compliance infrastructure takes time and money that most competitors are not willing to spend. Now let's look at how Ripple's network is actually expanding in practice, because the partnerships announced around this expansion tell a very specific geographic and strategic story. Amina Bank in Switzerland is using Ripple's infrastructure for cross-border payments for both institutional and crypto-native clients. That gives Ripple a foothold in one of the world's most important private banking markets. In Brazil, Banco General and Cambio Rio are using Ripple to enable cross-border payment flows into and out of one of Latin America's largest economies. In the Philippines, APN is using Ripple for B2B outbound payments, which is a massive market given the volume of remittances that flow in and out of Southeast Asia every year. And MassPay, a platform that supports payments across more than 100 countries, is running on Ripple's infrastructure and supports multiple currencies, including the euro and the Thai baht. What this network of partnerships tells you is that Ripple is not trying to win one market. They are building a mesh of interconnected payment corridors that spans Europe, Latin America, Asia, and beyond. In March 2026, Ripple also participated in the Nordic Cash and Treasury Management Conference in Stockholm, which signals that they are actively positioning themselves within the European institutional finance conversation as well. And in Asia, Ripple's presence continues to deepen, with SBI Remit in Japan having used Ripple's solutions for Japan to Thailand remittances since 2021, with growing interest in potential collaboration with the Bank of Japan on blockchain infrastructure. Now let's address XRP directly, because it belongs in this conversation, but it needs to be placed accurately. XRP is the native digital asset of the XRP ledger, the blockchain that Ripple helped create and that underpins several of its products. Within Ripple's payment infrastructure, XRP serves a specific functional role. It can act as a bridge asset in on-demand liquidity operations, meaning when a financial institution needs to move value between two currencies that don't have a direct liquid market, XRP can serve as the intermediate step, allowing that conversion to happen in seconds rather than days. This is not a theoretical use case. Ripple has been running on-demand liquidity operations using XRP in live payment corridors for years. However, it is important to be precise here. XRP is one component of a broader ecosystem that now also includes RLUSD and traditional fiat currency flows. Ripple's platform is designed to be multi-currency and multi-asset by nature. The value of XRP to this infrastructure is tied to the actual utility it provides within real payment operations, and that utility is growing as the number of payment corridors and transaction volume on the network increases. No price predictions, no targets, just an honest description of what XRP does inside this system and why the growth of the system is relevant to understanding XRP's functional role within it. Here is the bigger picture that this entire announcement points to. We are in the early stages of a fundamental shift in how institutional money moves around the world. For decades, cross-border payments have been slow, expensive, and opaque. A wire transfer between two different countries can take days, involve multiple correspondent banks, and eat significant percentages in fees along the way. Blockchain technology, and specifically the combination of regulated stablecoins and compliant payment infrastructure, is beginning to replace parts of that system with something faster, cheaper, and more transparent. Ripple is not the only company working on this problem, but it is one of the few that has done the hard work of building regulatory compliance, institutional partnerships, and real transaction volume simultaneously. The stablecoin market processing $33 trillion last year is not a crypto trend. It is a signal that the financial system is beginning to absorb digital asset infrastructure into its core operations. What Ripple announced on March 3, 2026 is a significant step in that direction. Not a moonshot, not a revolution that happens overnight, but a methodical, regulated, institutionally validated expansion of a payment network that is already processing real money for real clients in real markets around the world. That is what building financial infrastructure actually looks like, and that is worth understanding regardless of what the price of any asset is doing on any given day. This video is for educational purposes only and does not constitute financial advice. Nothing discussed here should be interpreted as a recommendation to buy, sell, or hold any asset. Always do your own research and consult a qualified financial professional before making any investment decisions.